Okay, good morning everyone and welcome for today's financial hearing with Clas Ohlson. I also like to welcome everyone participating via the webcast and telephone conference. Moderator today is Stellan Hellström from Nordea. He will be back later and lead the Q&A session. But I now hand over to the CEO of Clas Ohlson, Mr. Klas Balkow. Please go ahead, sir.
Thank you very much, and let me of course also welcome you all to our presentation for the fourth quarter. That will also sum up the fiscal year 15-16. Let's now see if we get the... I hope you've seen some of the fantastic image from our opening in Germany. I'm going to try to stop this, I think. There you go. Let's now move into to the agenda for today. We will cover the fourth quarter, our smallest, seasonally smallest quarter that we have in our fiscal year. Also going to sum up the full fiscal year, talk about and present some of the things that have happened in May, and also give you a quick future outlook. And then, as noted, we will have a Q&A led by Stellan Hellström from Nordea. First of all, let me just sum up for you who don't follow us every day in terms of Clas Ohlson, a quick overview. We have now 207 stores, and for the first time we can now say we're actually in 6 countries, which of course we are very pleased to note. Rolling 12 is around 7.6 billion SEK. If I should sum up the presentation today in a few, 2 or 3 bullets, I think this will sum up the full fiscal year in terms of another all-time high sales for the year, despite, I would say, we've had some significant pressure on our sales currencies. We're also delivering an all-time high operating profit if we then exclude the non-recurring cost that we've taken for optimizing the UK store network. And we're also clear about that we're now taking the next step on our international agenda. Next step in the UK, both in terms of adding more smaller stores, but also reducing our store network with 7 stores, as well as taking our first step into the interesting German market. Let's then go into the fourth quarter, and sometimes you have to say that an image says everything. We've had a fourth quarter that we have, if you compare that to last year where we started this spring in March with really nice weather, and I think we planned some of the same this year as well. We had a lot of campaigns with barbecue and gardening products and so forth in March and April, and particularly April. At the same time, it was more or less snowing from day to day outside. So of course the campaign was not the most successful ones we've had. So this has of course somewhat affected the fourth quarter. If we then look into the sales key ratios, the sales ratios, we are growing with 5% as a company in local currencies. We had a like-for-like sales of +2, which is, compare that to the full year of +3, it's somewhat lower. So it's been a little bit softer quarter for us. However, if you look at it, we are reporting a growth in Swedish krona, which is just a few millions above last year, due to the strong impact of negative currency effect of 5% in the quarter. We have now fewer stores there versus last year. We have 7 more stores in the network. Compare that to 13 stores in the network that we had last year. We've done 1 opening and 1 close of a store in Norway during the quarter. Sales share per market, more or less same ratios that we've seen the last few quarters. Compared to last year, it's more currency related, that Norway had 40% share of the market, now it's down to 39, but more or less the same split between the different markets. And if I then go through market by market, going to the largest market, Sweden, we continue to see a fairly stable consumer confidence in the Swedish market, as well as a fairly healthy retail market as well, with an overall positive retail climate and an okay growth as well from a total perspective. Looking then at Clas Ohlson, in the fourth quarter, we're up 4%. We are growing. We have now opened up 1 store. We have 5 more stores in network. I think we are strengthening our position. We have a strong position in this fairly healthy market. By detail, if you go into it somewhat, you can see we also had a positive professional market in the do-it-yourself segment, somewhat softer in the consumer side. But in overall, it's a fairly positive market where we continue to see a strong position. Going then into the Norwegian market, we've seen that over the last quarters of the consumer confidence has been somewhat soft and declining. Positive to note that the last quarter now is picking up a bit, while retail spending has been dipping in the fourth quarter overall, if we talk the overall spending in Norway. For Clas Ohlson, we continue to gain market shares. We continue to strengthen our position in the Norwegian market. We are growing with the 5% in local currencies. We have 72 stores. As I said, we have closed 1 store in the quarter, so we're now having 72 stores versus last year 73. However, so we are strengthening our position in the Norwegian market, but as you can note, in terms of reported numbers in Swedish krona, we have a significant currency impact in Norway as we are growing with 5% in local and reporting a 5% decline in Swedish krona. In Finland, consumer confidence continue actually to pick up. We saw that somewhat last quarter, which is we're pleased to see, as well as retail. Overall retail climate is also coming up slightly, even if it's coming from lower levels. So we're still in the soft market. For us, we continue to outperform the market in Finland, which we are very pleased to see. We are growing with 9% in local currencies, and also here in Finland, we are reporting an 8% growth in Swedish krona. So even here we've had, and also here we've had a negative currency impact. But again, we are strengthening our position in the Finnish market. We are clearly taking steps in Finland, and we are pleased to see that positive development now, as you can see, year by year. UK, even if UK for us it's a large market, for us it's fairly small, but from a consumer confidence it has dipped a bit the last quarter. And retail spending is picking up a little bit, but it's actually on fairly low growth levels, 1 to 2% from a total retail spending point of view. If we then go into how we are reporting our numbers, as we are not sharing UK specifically, we are reporting the outside Nordic performance, which in this quarter includes the UK and the franchise store in Dubai. We are growing with 3% in local currencies. Again, currencies has been negative for us, particularly towards the pound. So we are reporting a 3% decline in Swedish krona. Like for like is somewhat positive, but it's still more or less in line with last year, slightly positive in the UK. So we are strengthening and we are showing a somewhat better performance in the UK. Dubai store is actually performing really well, which we are pleased to see from a local or from that perspective locally. We continue to search for the next location in Dubai, together with our franchising partner in the region. Now, moving to our next ratio, gross margin. As you know, and as I've shared now, we have faced some significant challenges in terms of selling currencies, which has obviously impacted our gross margin. So in the quarter, we are reporting a decline of 0.6 percentage points to 40.8% gross margin. Now, again, majority of that is an impact from currency. Compared to last quarter, it's mainly the selling currencies. Compared to last year, it's also an impact of the dollar that is still has some time lag in our inventory, even if that starts now to gradually fade out. We have reduced the impact on the currencies due to the sales mix and also some hedging, particularly then hedging now is on the selling currencies, as well as we are continuing to work on our sourcing efficiencies and sourcing cost in general. Coming then to the currency impact, and just give you a few slides on that. The dollar, as we've talked now for the last quarters, the dollar impact of the drastic change in the dollar some years ago, we still, as you see in the report, has some time lag compared to last year, not compared to last quarter, but to last year. And that is now gradually fading out. As you can see, it's now more than a year that we start to see the dollar is leveling out. However, the Norwegian krona is now the other large currency that is a large impact for us. And even if that also starts to level out in 1-to-1 ratio versus the Swedish krona, this is symbol the hedging effects that, as you can see, we have had positive hedging impact from the Norwegian krona the last quarters. That's also now starts to fade out as well. So we're not getting as favorable hedging any longer, looking at quarters ahead, and also even in this quarter somewhat. Share of selling expense. Well, we have to say that we are more or less in line with last year at 39.2% share of selling expense. I would like to say that we continue to have a good cost control in the company, as this ratio is also, of course, also impacted by the negative sales currency effects. So from a ratio point of view, we continue to work on our efficiency measures to balance, even if this now is somewhat up, but is very much related to selling currencies as a ratio. In early April, we presented that we are now taking some clear steps in the UK. In terms of optimizing our UK store network. We are focusing now to add more smaller store in the London region, at the same time as we are closing 7 larger stores in the network. The cost related to this is 107 million SEK and will be accounted as non-recurring cost. We have a tax impact of 7 million SEK on this non-recurring cost, and we estimate a yearly saving when we are through this program. We are now doing this in this year, 16-17, and when we're through this for year 17-18, that will see a saving of approximately 70 million SEK annually. So this sums up the fourth quarter profit. If you look at the operating profit, sums up due to the slight decline on our gross margin to minus 19 million SEK compared to minus 8 million SEK last year. Again, the smallest quarter. If we then include the non-recurring cost, we are reporting 126 million SEK loss and an earnings of minus 1.7 krona per share. Well, again, fourth quarter is the smallest one, and I think the more interesting part is to look into the full year. And yes, we have had significant currency challenges this year, but I have to say that many things have happened in the company during the fiscal year 15-16. And I thought that now it's a time to go through when we are summarizing the full year. I just would like to give you a few words and a few comments of the things that have happened in the company. And then starting with the product range and the product range development, I think we've had really high activities in terms of developing and adapting our range towards the consumer needs. We focus a lot on practical smart products. We have had a high focus on sustainability, and as you've seen, we are now starting to add more and more sustainable products into our range, and we're getting a positive response on that from our consumers. We have over 10,000 spare parts in the company and seeing a fantastic growth on the spare part business, still from low levels, but it's really nice to see that the consumers are appreciating the opportunity to repair rather than to buy new. And private labels continue to increase. We are now at the level of around 30% share of sales. So the momentum that we have in terms of quality, design and price is paying off. Obviously, it's two sides of this. This is healthy and it's positive for the consumers of really great value. It's also healthy for our margins. But from a top line perspective, obviously, it's not providing the best top line as we are selling lower priced items to the market. We're also very clear that our omni-channel strategy in terms of how we are driving the company forward, it's a key strategy for us. And even if we are not yet getting the full effect of what we want to do due to the system legacy that we are currently in, we'll come back to we are, as you know, we are updating our ERP systems. But we continue to develop our channels and we continue to do that and we continue to work on their seamless approach. And if I just go through the store development, we've done a lot of activities in the stores. You see even some of that here in Drottninggatan. You'll see that in the store in Galleria nearby. But also we are taking steps on our formats. We are taking steps in the concept in general. We also launched now the smaller format. We launched that, as you know, in the UK, and we have increased our pace in terms of refurbishing our older stores. We have refurbished 14 stores during the year compared to 10 last year, which includes also the larger outlets in Helsinki, the Kamppi, as well as the large outlet or the large store here in Gallerian nearby. We are also happy to note that we are increasing our loyalty with the consumers. We're getting recognitions. We're also seeing that the growth of loyal customers is growing. We've just reported that we have over 2 million members in our Club Clas program. That is, a majority of that is in Sweden. We also have it in Finland, the program in Finland. Clas Office that we launched a couple of years ago is actually also developing really nice. We have a healthy growth. And as you can see, our members this year is now above 65,000 B2B customers in our program compared to 29,000 last year. So a healthy growth in terms of how we're now building up a new customer segments for the company. E-com is another area that actually shows healthy numbers. Again, coming back to that, these channels works together, hence why we are reporting only one number. But the RUPO effect or research online and purchase offline is very strong for a Clas Ohlson concept as we have the stores so nearby and it's convenient to drop by to our stores. But of course, that we are seeing a positive traffic, we are seeing a positive sales growth, and we have to comment that we are pleased to note that in actually a few weeks ago we got awarded from mystery shoppers in the Nordics for having the best customer experience and best customer service online in our platform. This year we also tweaked in many areas and on many parameters in terms of our sourcing. I'll talk about the direct sourcing part, but also worked on in our distribution center. We've never been more efficient in our distribution center up in Insjön, and we continue to work on that to improve ourselves. We also taken steps on our transportation, where we're working particularly focusing on more transport on train, which is not only saving us money, but it's also something that is very good for the environment. And finally, we're also putting a lot of efforts in our systems. As we have shared, we are in the middle of implementing our new ERP system, and changing an old system is always a challenge, while the potential is fantastic in terms of what it will give us for the future, in terms of efficiencies, as well as how we can meet the customers in the future way, as well as it gives us a strong platform to grow and expand from. We've just started the rollout now in the first UK stores. So we started to roll out the program step by step, and we are now planning to roll this out the coming years in the countries, as well as adding more and more areas into this system. So this sums up then not only some of that activities, some of the larger ones that we've done during this year, and if I then look into the key ratios for the full fiscal year, we are reporting a sales growth of 6% in local currencies. We have a like-for-like sales of plus 3%. We are reporting a growth in Swedish krona, coming back to the currency impact of 4%. So we have a currency impact also on the full year. We have 10 more stores in the network, and if you're looking into, we have closed 3 stores, so we have 7 stores net compared to 13 stores that we had last year. Share of selling expense, we have, if you look at it from a full year perspective, we are down 0.5 percentage points, indicate again that we continue to work on our efficiency, but it's also, of course, very much supported by the healthy like-for-like growth that we've seen this year. And it sums up, if I then exclude the non-recurring cost that we talked about regarding the UK stores, it sums up to an operating profit of 613 million SEK, which is another all-time high for the company at the margin of 8.1%. And if I then include the non-recurring cost, we are reporting a profit for the fiscal of 506 million SEK at an EBIT margin of 6.7%. We continue to invest. I've talked about particularly the ERP system that will go in various phases. We've had a year with high investment on the system. In total, we are investing in stores and refurbishment, but the majority of the investment, as you can see on this, has been related to IT and to our IT platform. In that, and also, if you're looking at the cash flow, we continue to have a very strong operating cash flow at 705 million SEK compared to 647 million last year. Our inventories are slightly up, but it's very much based on the impact or the dollar impact that we're seeing in or the dollar rate that we now have in our stock, which is reflecting in that. Also a reason why you see that inventory turnover is somewhat down versus last year. We have a strong net cash. We have a net cash holding of 604 million SEK compared to last year of 517. And based on this, the board of the directors is proposing to the AGM a dividend payout of 5.75 kronor per share, which is a 10% increase versus last year. And based on total shares, this represents 100% of our net profit, and based on outstanding shares, it represents approximately 96% of our net profit. So that was some of the key ratios for the fourth quarter, as well as summarizing the full fiscal year 2015 and 16. If we then move on and look into what have happened after the period end, and particularly then into to the main numbers, it's clear we started on the soft side. We report a 1% growth in local currency, and due to the negative currency situation we have, we are reporting a minus 3% growth in Swedish krona, reflecting the weak Norwegian krona as well as the pound. But however, if you look at by market, Sweden is growing. We have a positive growth in Sweden. We are growing with 6% in May. We're also growing in Finland, so a healthy growth also there. We have fewer more stores in Finland. Outside Nordic, it's 14%, which obviously is boosted by the positive launch we've just done in Germany. So what singles out here is Norway of minus 6% in May. And now we are early out. The only indication we have is that there's a soft Norwegian market. We have some negative calendar effects in Norway in this. And also the only thing we can see from our side is that last year we had a 14% growth in Norway, so we are meeting high comps. We had some aggressive campaigns that we've not done this year. Again, coming back into that, we had a 5% growth in the fourth quarter in Norway. This is a single month that seems to have been on the softer side. I also would like to note that, or comment on that, in May we also launched the new Co-Craft Pro Edition. So why are we lifting up this? Well, it's a private label, and it's the first time we're actually launching products in the upper segments, in the professional segment, with a few number of SKUs. But it's an interesting part where we are going into a new segment with our private labels. We've had a fantastic response, initial response from the consumers in this. But it is a step into a new segment that we are now evolving and seeing how this will be over time received. So we think this is a very interesting one for the future. Gives you great value to the customers, to the consumers, at the fantastic quality products. So finally then, as you saw some of the slides in the opening here, in May, after years of preparation, we are now finally open up our first store in Germany, in Hamburg. It's the first store is located in Jungfernstieg, which is in the middle of the city of Hamburg. In I would say a fairly famous building there, Streithaus. So it's been kind of a flagship store that we've set up, and we had a very, very positive week. We started with some pre-opening activities. There's been a high interest in general, I have to say, of that Clas Ohlson is coming to Hamburg. So we had a pre-opening activities. We've had some of course some commercials and some marketing prior to our opening. And then on May 19th, we were very pleased for the first time to welcome our first German customers. I know that many of you were not there, so we actually have made a small video to show you the opening day. See if this works.
Are you ready? Yeah! Okay. 1, 2, 3. Willkommen nach Hamburg zum Start.
I hope you got some kind of sense of the opening day. An opening day is always an opening day. We had a lot of customers queuing. We actually had a long queue for hours outside the store. Of course, some of that supported by strong opening offers on the opening day. But I have to say that the customer count or the traffic was positive, even more positive that we even had higher traffic on the weekend that came afterwards. And partly out of that was that we got a fantastic response from the opening and a fantastic PR response. I think it's been in some way you can say it's been overwhelming. The opening, the interest was large from the beginning. We've done some impacted marketing activities, and the interest of Clas Ohlson now coming to Germany was strong. But also it was also of course supported by the day after the opening. We got the visit from Her Majesty Queen Silvia, and for you who know this, she's fairly famous and seen positive in Germany. So it's been so the interest there was big. So we got a large impact of the grand opening of Clas Ohlson coming to Germany. So a positive start and a positive and encouraging start also the first couple of weeks in terms of traffic and in terms of we are over expectations in terms of sales. But again, it was a start, but it is clearly encouraging for the future. And talking about then the future, let me end this presentation with just a future outlook for 2016 and 17. We plan to open up 10 to 15 new stores, net including then the changes that we are doing in the UK, it will be 3 to 8 new stores net. We are putting a lot of focus on the UK plan to execute on the UK plan, including adding 1 to 2 more of strengthening the store network of smaller outlets in the London region, as well as closing the 7 stores. Obviously, high focus now for the German plan with the encouraging start. We are now rolling out Altona and Alstertal later on this fall, as well as our e-com platform. And we continue to see, as we have seen today, the challenges that we have on our currencies, and of course that will be high on our agenda to work on to balance the currencies. We have, as you've seen so far, been able to address this towards a few activities that we are doing in terms of sales mix, in terms of sourcing, in terms of efficiencies. Over time, again, we believe this will sort out, but of course it will have some short-term impact, as we've seen to date as well. So that is overall the outlook for 16-17. And if I sum up this presentation, I think it's fair to say we are now summarizing up our fiscal year 15-16 at an all-time high sales and profit. We have a very strong financial position in the company, as well as we have high energy for taking the company forward, particularly also in our home market, but also on our international agenda. Thank you. That was part of the presentation from my side, and would like to welcome up Stellan Hellström from Nordea to lead the Q&A session. And we are directed that we should stand very close towards each other.
Nice. Let's start off then with a question on the gross margin. You've obviously been able to mitigate a lot of the US dollar headwind for the sourcing, but there's some additional headwind of a weak Norwegian krona. Now, maybe to what extent was seasonal weak sales of seasonal products affecting your gross margin in this quarter? And also maybe if you can give some feel for how, with more stable exchange rates, the gross margin outlook for the next few quarters.
Well, if I try to comment on the first question, of course, that with the somewhat more colder spring, actually it's been supported for our gross margin in the fourth quarter, as we have not sold so many high-ticket items, which is more on the lower margin side. So that has been on the positive side, despite the somewhat lower sales. Now, relating to the currencies, and I've tried to look into that towards the graphs, we've seen a positive hedging effect. Now, if you look in the majority of the currencies, is the Norwegian krona. We've seen some positive hedging effects that is now fading out. So that will have the short-term impact for the coming quarters. The levels of that, then it depends on many things. It depends on the sales mix. It depends on how the currencies will evolve, as we only hedging half of our currency flow. So there are many parameters influencing. So I will not give you forecasted numbers in terms of that, but the impact, everything the same, will be that we are losing some of the hedging effects the coming quarters, particularly on the Norwegian krona. For the dollar, that starts to, I would say, in quarter 2, quarter 3, we start to fade out the dollar impact in our inventories. It will not be any significant. You'll still have some, but it will not be significant any longer.
When it comes to price movements in the market, what do you see, and are there any differences between the different geographies?
No, particularly when we started to see the large dollar impact, you saw some changes. Obviously, it was impacted the whole market. We saw some changes in the market at that stage, and we've been able to follow. Again, we are never compromising on our price position. We were able to follow and I think that was valid across more or less all markets. So there's not been any major differences between the markets in that perspective.
Your like-for-like sales was up some 3% in the last fiscal year. One would expect that you had some help from inflation in your categories due to FX, but can you maybe give some flavor on how the number of visitors, conversion, and receipts have developed?
No, it's the flavor I can give is actually developed in the clearly in the right direction in terms of both conversion and also if I look at, as I commented on, the positive side of our private labels has been that it's been supported the consumers in terms of great value and our supported from us in terms of some margin effects. However, from a top line, we sold more volumes rather than value in that perspective. But if you look at the ratios with the stores, they've done a fantastic job, both in terms of ticket value, but also particularly in terms of conversion.
I think if we look at Sweden specifically, the number of visitors per store have declined quite a lot over the last few years. How did that develop in the last fiscal year, and are there any particular effects that you see here from competition or?
Well, I think overall, since we also strengthened the store network, we've spread out, and I think if you look at the Swedish market, I think we talked that over the years. If you take out the perspective a bit longer, we've had we together with our competitors have added significantly more sales space in terms of square meter store space out there, and of course the traffic has not corresponded to the strong amount of sales space growth. So of course that has been spread out more, which has impacted us in terms of general traffic. And also we have today the traffic, and that's why we're also working so much on the omni-channel structure. Traffic in general, you have a lot of the consumers who is searching online and are more targeted instead of browsing out on retail street, and then they are more targeted when they come. So in that perspective, you also see somewhat decline in general traffic pattern.
All right, Niklas.
Thank you. Good morning. My first question is actually also on the currency side. Now that the hedging is fading, the positive hedging effects, no one knows how the customer is going to react, but do you anticipate to be able to mitigate the changes that you will face from currency by means of changing price mix and all those factors you have to work with? Or do you actually plan to take some of that currency effect in your own margins, please?
I think the same message there that we've had over the last couple of years. We are following the market. Over time, I think this will balance out. I think the market is a competitive market. It's been competitive historically, and it's still also very competitive. So we are following that. So over time, I think this will balance out. Short term, you will see short-term impact, but over time, it will balance out.
More specifically, have you changed pricing or mix in Norway so that there's something company specific affecting May sales in Norway?
No, but I think again, no. So the direct answer is no. And if I come back to again the fourth quarter in Norway, we had more or less a 5% like-for-like growth in Norway. A healthy growth, and May singles out, and again the general feeling we have, since we have not seen the market, we are early out. It's been a overall soft general conditions in Norway in May. You have some calendar effects, but they're on the smaller side, as well as we ourselves are meeting high comps compared to some aggressive activities that we did last year.
But there's one full weekend less in May this year compared to in May last year, which had 5 weekends, right? So there should be some sort of calendar effect, I assume.
Well,
fairly negative.
Well, if you look at number of days on selling days, it's not been that large. But I think if you look at, now you're going into details, but if you look at May 17th, the big day, which is a holiday in Norway, that was last year on a Sunday, which is still even a closed day. And now today I think it was on a Tuesday. So you had some weeks that has been disturbed, if I may use that word. Now it's difficult to see so even on opening days, maybe not that big change, but you have some disturbances in the market, I would assume.
Final FX question. Could you share with us how much of the stock in trade at the end of the period, which was actually affected by currencies, translation effects in inventories?
You're looking at Göran, so you can jump in, our CFO.
Yes, I can say, of course, we have effects in the inventory due to the increased dollar, as we mentioned earlier. We also see an increase due to the increased number of stores. But on the other hand, I think we are actually managing our inventory levels quite well. But we still have an effect compared to last year due to the dollar.
Okay, another question from another Niklas.
Yes, Niklas Ekman from Carnegie. We were talking about Norway. In general, if you look at the monthly sales figures in Norway, they have been quite volatile. You've had a few really strong months and a few really weak months. Why is Norway so volatile? Is there any difference in timing of campaigns or things like that? Is it a more campaign-driven market, or is there any conclusions we can draw?
No, and I think we've commented on that the market has been volatile. However, I think that the last quarters we have been fairly okay from a quarter perspective. Again, looking into the full year as well as the last period and the last quarters. You can have some changes of timing of campaigns, but it is not really that kind of large impact for us from a campaign point of view. We had why I am lifting up the May campaign that we did. It was actually somewhat unique one-timer campaign we did last year, which we normally don't do. So it was not a normal campaign, and that had a boost on the numbers. But I think I would not say there is a general pattern that campaigns is more disturbing. It's been the Norwegian market has been more volatile. I think we have been fairly stable. Now you can have weeks changes, but I think we need to be a little bit more long-term perspective.
Okay, and turning to the Swedish market, have you seen or do you foresee any impact from the lowered ROT subsidies, from the amortization of the mandatory amortization of mortgages? I know you're in the consumer segment. It's not the same. Your exposure to building materials is much lower. But either way, do you see any kind of impact from this?
No, the only thing, if you look at the do-it-yourself material and do-it-yourself product, the only thing we have looked at when you see in the very strong growth in the reported in Sweden by the do-it-yourself sector, that's been very much driven by materials and also on the professional side. If you look at the tools, it's been more professional business. Rather, if you look at the consumer segment, it's not been equally strong, which could be a reflection of that we have used more professional workers due to the root part. Now we have not seen any drastic changes over time. Now you could argue that if root is not so much used any longer, that you do it more yourself, which fits our business model even better.
Okay, good point. You were talking about the new concept here that you've been rolling out now for quite a few years. How many stores do you have left with the old format? And by now, can you draw any clear conclusion about the impact of switching from the old to the new format in terms of sales impact?
I should be able to answer you that on hand, but if I would say, and I'm looking at you, and I would say around 20%, 15-20%, somewhat that is still in the old format. I can confirm that number later on. I actually don't have it completely on hand. Now, of course, yes, we are changing to the new format since we are seeing that we are meeting the customer needs in a better way. We are getting a positive development in terms of also running the stores is better for us from an efficiency point of view.
Okay, but no, you can't quantify the effect.
I can, but I will not really share it, obviously.
Okay. You also discussed the ERP conversion here that you are going through, and you said you expect some great improvements. Can you quantify that effect, or at least give some examples of? I mean, what kind of effects? Is it cost efficiencies or inventory reductions, or online functionality, or what kind of impacts do you expect?
No, I'm humble in terms of changing systems, in terms of direct impact. But I think, of course, a clear one is inventory management. We'll have significantly better systems for that as we move on. But also for us, we are having a very old system, again, which we're looking into supporting our future strategies to meet the needs of the consumers as we move on. We are getting now a fresh, completely new system that could work on an omni-channel structure, where the seamless experience for the consumers from an online together with the stores activities like pick up in stores that we have, but we can optimize it even better. And also from a structural point of view, with a new platform, we can work on differently in terms of a distribution center. We can add more distribution center and so forth. So it gives us an opportunity and a platform for future growth. It will give us some efficiencies in various areas, but I think the larger part there, if you look at it, will be inventory management is one key area.
You mentioned that this is a quite challenging process. Have you seen any disruptions along the way? Have there been any delays? Has it been more costly, or is this very much running according to plan?
Well, changing, and I think you're setting out the plan, and then when you're going into old system and working on the old system, of course, that you're going somewhat up and down in a project like this. As I mentioned, we just started to roll out the first parts in the first stores in the UK, and we have, and it's been been a positive rollout. So we are now focusing on to roll out to all stores in the UK, and then we'll do a country rollout as we move along. Now we will sum up the whole thing, I think, and I'm not going to say we are completely there yet, but we will gradually sum it up when we start to see that it works fully. I think it's fair to say it is a challenging project when you're going into an old system and changing your whole platform. But I think that we're putting a lot of efforts on it, and we are planning it cautiously.
Good, thank you.
Your online sales is increasing, as you mentioned, but I would guess that your market share online is smaller than your share offline, so to say. Where do you see Clas Ohlson in the future in this respect?
Well, I think all categories and all companies will have some of their own kind of unique share of online, but I think we will follow the general trend of that online will take a higher share as we move along. Now, I will not say an exact number, but I think that if you look at the system we have with smaller items, small fixing things that you need handy on directly, you will see the benefit of that. You're searching when you're sitting in the office, and then you pop by and you buy it directly. That will hinder, in a way, you can say, actually the conversion just on the online platform. Now, then you can argue, where is the sales coming from? And I would argue that it actually comes from online in a way, even if you go to store and pick it up. So the mix there is important. Without giving an exact number, I think that the share will continue to increase. We have a very strong growth on our online today. I would say even stronger than the market in general. But I think we're also coming from fairly low levels as a percentage of sales for Clas Ohlson.
Okay. Now you've had your smaller format in the UK in place for at least a few months. 6 months, yeah. Any initial thoughts on how that is progressing?
No, they are progressing good. One is somewhat better than the other, but if you look at the sales per square meter, we're more than doubling our sales per square meter in the stores, so we are really taking steps in the right direction with the stores, and we continue to learn, we continue to adopt. In these stores, we have the pick-up in-store alternative, which is also growing week by week, so which gives the consumers the opportunity, because obviously they will not have the full range in these smaller stores, but they have the full range online. So there you see the ultimate, of course, where work the full range together with their smaller store format. So sales is picking up. The measures in terms of sales efficiency per square meter is really picking up in a good way versus the base. But we continue to learn, we continue to adapt, we continue to work on the concept, and we're also planning, as shared, to open up 1 to 2 more stores.
Very good. And the stores that will be remaining in the UK of the older or the larger format, what are your plans for those? Or you intend to develop those, or you?
Yeah, sure. What we did in April, we went out and we identified the 7 stores out of the network that we plan to close down, and we started that project. We have no other plans for the other stores. We obviously put a lot of efforts of developing them to continue to drive and to drive both sales and customer experience in these stores.
Were those stores that on average did better than the ones that you're closing?
I guess that there's a reason why we are closing some parts of the stores and not some others. So, okay. Yes.
Very good. And your Clas Office initiative, any thoughts on how that is progressing?
Yes, and I think as I shared here, we started, and I think we started from this is a new part for us to turn to, particularly with focusing on small, medium-sized offices. We have seen a strong sales growth, and we are very pleased to see that the members of the Clas Office program has increased significantly this year. We have passed over 60,000 members in our business-to-business program. And that's over 100% growth. No, it developed very positive. We can see, and which was part of the plan of where we are turning to small and medium-sized offices. They are also located very much, or many of them are in the cities where we have the stores. So of course that the store network works really nice for these where you are. So you're seeing a good mix of these customers coming into the stores as well as shopping online, but the majority is in the stores. Reason why that we are located very nearby the offices.
Yeah, a question there.
Yes. A few questions, short ones. First, how come you're taking a Q1 cost for the launch in Germany? Haven't you been working on that for like the past year?
No,
or is it an investment that you capitalize on the balance sheet, or?
No, I think we've had a pre-opening or a pre-work, you can say, for years, and which has been on the minor side. Now, obviously, when we made this grand opening activities, and also we are supporting the store significantly in the beginning with mentoring program, with all of that. Normally we had a startup cost of a store, and as we have now flagged out, we have a somewhat higher startup cost for the stores and for Germany in total, which will be added on into the first quarter. So that's why we flagged that out. So it's not it's part of our normal cost structure, but it's just want to be transparent with the effect that this will have on the first quarter.
So, okay. So, and a follow-up question then will be, when you launch the other 2 store openings.
More normal store opening cost, if that's what you're coming
Yes. Can I also ask you, how does the sort of P&L structures look if you compare the launch you did in the UK or where you are right now in the UK compared to Germany? Is there a higher sales per square meter or any efficiency measure that you need to reach in Germany to arrive at the same margin compared to the UK, or is it the other way around?
Well,
how does the cost structure look? Are gross margins the same, price points the same, SG&A is the same as in for example, the UK?
Well, it varies somewhat, depends on if you look at some of the stores that we have in the UK, and some of the stores, as we are now taking also some actions on, was on the larger side compared to, we are also concentrating our efforts into one city in Germany, into Hamburg, which will give us some efficiencies. We have the Altona and Alstertal are on the more normal to the smaller, or not smaller, but more medium-sized stores. The ratios as they look good in terms of it. Obviously, if you look at the Jungfernstieg, which is the flagship store, we are counting on that we will have a high traffic in that store, and we've been seeing that so far. But obviously we want that to move along as well.
Could I also ask you, are you closer right now to 3 or 8 new net store launches in this year? I mean, you should have a fairly good idea of the opening schedule.
Well, I think if I don't know, if I look at Göran, or I mean, we have in the report, you see in the contracted stores, so you see how many we have contracted, and between if I look at the 10 to 15 stores, well, I would say we are more in the mid-range of that as we look at it right now.
Thanks. Could I also ask you, what do you think will be the average store size in the UK franchise when you're done with the restructuring? You opened up the new store formats.
Not franchise.
No. In your UK store network.
The UK store network, the average store size, is that?
Yes.
Well, right now we are pleased, as Stellan asked, in terms of the currents that we are keeping, which will be some of that are on the larger side. The one that we are focusing on now is not any more larger stores at this stage. We are focusing on strengthening the network in one region in the London area with this smaller store format, which I would say optimal will be around 300 to 400 square meter.
Thank you. Also, you took in Q1, you took a charge of 10 million to close down the first store in the UK. What was actually released in fiscal Q4 results? And what was the actual cost compared to the provision?
If I understand your question right, that was last fiscal year on the first, so we just keep control on that. So the last fiscal year, first quarter, we had a cost for the Birmingham close, and basically that closing cost, as we then shared, the saving of the remaining part of the year was more or less neutralizing. Okay,
thank you. Then just a nitty-gritty question, but. If you take the tax item, obviously it's not a restructuring cost, but it's perhaps a non-recurring item. Where is that tax cost actually included, on the tax line or in EBIT, please?
Tax question, finally. The tax cost 7 million is included in the tax line in the P&L. And the reason why is because some of the one-off cost, 107 million, is not tax deductible. That's why we have an increased tax cost compared to if all the costs would have been deductible. But it's not included in the 107, but on the tax line.
Final quick question. 107 million, what is the cash cost and what is non-cash cost items? Thank you.
The items that is not affecting the cash is the amortization of fixed assets. So most of it, around 85 million, will be impacting our cash.
Okay, so with that, I think we will conclude this Q&A session. Thank you.
Thank you very much, and thanks for joining. And we'll soon open up the store as normal, as always, so you're happy to shop. Thanks.